We all optimize our websites for Google, but today we learned Costco is actively optimizing its bulk pricing for ChatGPT. You're listening to Earnings Unscripted, where we unpack what really happened in today's earnings. It is March 5th, 2026, and we are looking at Costco, ticker COST, for their fiscal second quarter. And Miro, this quarter has, well, some really strange cross-currents hiding in the numbers.
Yeah, strange is a good word for it. Look, the wholesale machine is obviously still humming. Total revenue grew to $69.59 billion. That is up about 3.4% from Q1. Net income ticked up to $2.03 billion, or $4.58 a share. But you look under the hood, and the operating margin only edged up to 3.74%.
A quick thing before we dig into those margins, just a reminder that this podcast is not financial advice, just our personal opinions. So, the market kind of threw a fit today. The stock had an incredible run this quarter, peaking up over $1,000, right? But the regular trading session today saw a pretty sharp sell-off down to the 980 level. And then after hours, it was just flat, complete flatline. Why the sudden altitude sickness?
It is the expectations trap. When your stock is knocking on $1,000 a share, perfect is the baseline. And this quarter, it was not perfect. You have these accounting distortions everywhere. A $12 million LIFO inventory charge dragged margins down, while a completely random legal settlement propped them back up. Plus, they warned that a massive surge of new digital members is actually dropping their historic renewal rate. It is diluting their moat.
Wait, hold on. The e-commerce growth is hurting the moat? Because digitally enabled sales were up like 22%, and they slashed prices on staples to drive volume. The CFO said they cut Kirkland butter from almost $14 down to $8.49, which is basically the only reason my grocery budget is surviving. Are you saying these new digital buyers are just less loyal?
Precisely. The digital native buyer abandons ship faster. They sign up through an Instacart promo, grab the cheap butter, and then they bounce. But the most fascinating part is how management is fighting back. You mentioned ChatGPT. The CEO explicitly stated they are structuring data so that when someone asks for a generative AI for the cheapest groceries, Costco naturally surfaces first. They are hacking the algorithm.
Wow. So we have gone from physically wandering a concrete warehouse for an oversized rotisserie chicken to having an AI agent tell us where to buy bulk toilet paper. Okay, let's get into the details on that. There is so much to unpack with their pricing strategy and the special dividend math, too.
Right. Well, the AI thing is fascinating marketing, but the dividend math is just beautiful dark comedy to me. I mean, everyone was waiting for the famous Costco special dividend. They have the cash, but they literally cannot do it.
Wait, why not? If they have the cash, what is stopping them?
It is a victim of its own success situation. The stock price is just too high. Look at it. It is floating around $1,000 right now.
Okay, but I mean, a dividend is a dividend. Free money is free money, right?
Yes, but Wall Street trades on yield percentages. The CFO, Gary Millerchip, was actually really blunt about it on the call. He said, quote, to achieve a similar yield to last time when our stock was at $660, the cash would need to be greater, unquote.
Oh, wow. So if they paid the same total cash they did last time, the market would basically look at the percentage against $1,000 stock and say, well, that's a disappointing yield.
Exactly. They have over $17 billion in cash sitting there, up 7% from last quarter. Just staring at them, but paying it out right now makes them look cheap, purely because the denominator, the share price, grew too fast. It is mathematical irony.
That is actually hilarious. You do your job so well that you literally price yourself out of rewarding your shareholders. So what do they do with the capital then?
They build. They are guiding to roughly $6.5 billion in CapEx for the year. And what I found really interesting in the operations side is where that capital is actually going inside the warehouse.
Are you talking about the checkout thing? Because I read that in the filing and
Sorry, I had to reread it.
The 8-second checkout, yes.
Right, which is insane. Anyone who has ever been stuck behind a cart loaded with, I don't know, massive TVs and 90 rolls of paper towels knows the front end is a brutal choke point. How are they getting that down to 8 seconds?
So they are piloting these fully automated pay stations. You scan as you go, and by the time you hit the front, the physical payment loop is 8 seconds flat, which, from an engineering perspective, dealing with random item geometries, in those giant carts, it's actually brilliant workforce leverage.
Hold on a sec. Does this mean the traditional receipt checkers at the door are going to have to process people faster too? Because that's another bottleneck.
That is a fair question. They didn't explicitly detail the door flow, but if you unclog the register, the pressure just moves to the exit. Still, an 8-second register time means you process exponentially more volume per square foot of front-end space.
It really is wild when you step back. They're optimizing data for AI bots so you can find the store, and then they're optimizing the physical layout so you spend literally no time paying once you get inside. It's basically treating retail like a highly tuned machine.
It is entropy with better marketing and massive economies of scale. But the tricky part is whether this pristine machine can handle the chaos coming from outside the warehouse walls. Specifically the supply chain.
Yeah, that's exactly what I was thinking, because you can have the fastest checkout in the world, but it doesn't matter if the shelves are empty or if your costs are out of control. So where does this leave them heading into the rest of the year?
Well, looking ahead, they are playing this insane game of tariff whack-a-mole. The CEO pointed out they dropped the old import structures, but immediately got hit with these new 150-day blanket global tariffs. I mean, think about that. You are a massive global purchaser trying to lock in supply, but you essentially have zero reliable forward cost curves beyond a 5-month window.
Jeez. For a business built entirely on bulk forward contracting, that sounds completely exhausting. Can I jump in? Are you sure they can even confidently plan their warehouse rollouts with that kind of fluid cost structure?
They have no choice. The physical footprint is their main lever right now. Management guided for 28 net new locations this fiscal year, and they actually reconfirmed that broader long-term goal of 30-plus new warehouses a year going forward. It is going to be a pretty clean 50-50 split between the U.S. and international markets. They are basically banking on physical concrete to balance out that digital membership churn we talked about.
Right. So just settling back into their traditional, very predictable baseline, which honestly feels a little grounding after all the tech disruption talk earlier.
It is. The CFO, Gary Millership, essentially admitted the surge is settling down. He said, quote, "If you look at our long-term growth rate, it really is in more of that 5% growth range in terms of new members," unquote. They are fully embracing a much steadier, slightly boring reality.
You know, that is actually refreshing. Just a management team accepting a normal 5% baseline without inventing a wild growth narrative. Just keep selling the cheap butter, build 30 massive boxes a year, and, just make sure ChatGPT knows your prices are better than everyone else.
That is the Costco model in a nutshell. Relentless, moderately terrifying efficiency.
Okay, I think that perfectly sums up the quarter. Keep your receipts handy at the door, everyone. If you want these earnings chats to just naturally show up in your feed, go ahead and follow the show. As a quick transparent note, this entire podcast is actually built with AI tools, including these synthetic voices, just to explore how human the tech can really sound. If you have feedback or a ticker request, just email us at earningsunscripted@datamadness.ca or grab the X link in the show notes. Thanks for hanging out, and we will catch you next time.
Catch you later.